It's not been a huge impact, really. More than anything else, we've seen jitters. And the housing market is so prone to being volatile because of these jitters that we see. And so those are never good things. But functionally, we're not seeing a big impact to the housing market yet from activities. One thing that's created some problems for some borrowers is that IRS transcripts are delayed. So when folks go to request transcripts from the IRS to justify their income, those are not available to them. And so for some borrowers and brokers, they're having to wait to actually get those transcripts before they can underwrite the loans. But overall, FHA, Fannie, Freddie, VA are still underwriting and buying and approving mortgages. USDA, though, even here in Tampa Bay, is having an impact on some buyers.
But nonetheless, you do say bottom line, so far it's only been a small impact, but the debt ceiling is a whole different thing. It's the big gorilla in the corner of the room. What impact would that have if we go over with no deal?
Well, you know, the debt ceiling is a big deal because it fundamentally is what can impact interest rates. You remember what happened back in 2011 when we had the debt ceiling debate. We had our credit downgrade. And, and so we have the global markets watching what goes on in the United States, and we see almost a husband and wife effect of arguing and bickering between the House and the Senate. And what lender in their right mind wants to lend to a country that is functionally dysfunctional the way that our government has been when it comes to this debt ceiling limit? And so, yes, we saw that even though the debt ceiling was not reached in 2011, that had big impacts in our credit rating. And will we see that same exact thing even if we reach a debt ceiling agreement a couple of days from now? It's quite possible that damage has already been done and will be done long term because of this kind of dysfunctionality.